So you've had your business for a while, and now you're asking the question, is it finally time to become an S-Corp? Because the truth is, if you do it at the right time, it can be a super beneficial move for you and your business from a tax standpoint. But if you do it too early, you're actually just going to be costing yourself a lot of extra money and the extra time spent for compliance, but also the extra cost from making the transition. And the flip side of it is that if you wait too long, you're going to be leaving thousands of dollars on the table that could have been tax saving. I'm Harrison Patton. I am an entrepreneur and a tax strategist, and I work with other business owners to help them lower their taxable income and implement strategic tax planning so that they can grow their wealth long term while keeping their taxes as low as possible. And I've worked with dozens of founders and found when the exact time is that you should be looking to make the S-Corp election. And in today's video, I'm going to be telling you exactly when to do that and how to make the transition. And I'll be honest with you, it's not a hack for taxes, but it's a tool just like anything else. And every tool should be utilized at the correct time. So let's get into my S-Corp playbook that'll tell you exactly when to make the transition, how to make the transition, and the pitfalls to make sure that you avoid so that you can continue to be a successful entrepreneur. So most entrepreneurs will hear about the S-Corp on some random Instagram reel or some random Facebook post or in the gym, and some guy's like, hey bro, you should make your business an S-Corp. Nobody goes through and takes the time to explain when you should actually be making this move. I heard about a business owner recently who was only making around $15,000 of profit in the year, but had a friend tell him that he should upgrade to an S corporation. And by doing this, he had a bunch of extra paperwork, he had payroll filings, he had additional state filing fees, and had to pay his accountants extra for all of the extra work they did to make the S corp possible. So the truth of this story is that the tax savings were actually not any savings at all, because at that income level it just didn't make sense. The cost of compliance outweighs the cost of the savings. But on the flip side, take somebody who's making $150,000 in the taxable year, and they're going to be saving over 10 grand from making the S corp election on savings from the self-employment tax, and that's where the main benefit of the S corp comes through. So a lesson here that I'm trying to reiterate to you is that the timing of the election and the timing of making the transition from regular single member or partnership LLC to S corp matters crucially. So the first thing I want to do is I want to clear the air on what an S corp actually is. So if you are a regular LLC and you make the S corp election, you're not actually forming a separate entity. You still have your LLC, but you're just being taxed in the eyes of the IRS as an S corporation. So you can almost think of it, if you have a house, which is your LLC, and you make the S corp election, it's just changing the insurance policy on the house. It's still the same house, but the way it's looked at is different. So what exactly does the change do? So when you are a regular LLC, all of your income is strictly distributions. So your net profit all flows through to you as your owner's distributions, owner's profit. Once you make the S corp election, what you're doing is you're splitting that profit into a salary and distributions. And it's key to mention that it should be a reasonable salary, but we'll get into that later. And so the reason that you do this is you end up saving on self-employment tax. So for the S corp, the distributions are not subject to self-employment tax. Only the payroll W-2 portion is. And so that's where the tax savings are created, and they become super powerful for you and your business as your income grows. So the second thing that I want to talk about is, when does it actually make sense to upgrade to an S corporation? And so generally, once you're in that $40,000 to $50,000 net profit, so revenue minus all of your business expenses, once you're in that $40,000 to $50,000 net profit, that's when you should be looking to make the S corp election. This is the point where the cost, the compliance, the extra accounting fees, state filing fees, and all of that, it makes sense because it's outweighed by the tax savings that you'll actually be saving on that self-employment tax. So for an example, let's say that you're operating as a single member LLC that is not an S corporation. So if you make $100,000, that entire $100,000 of profit is subject to the 15.3% self-employment tax that the IRS charges. But if you're an S corporation, you get to split it, as I mentioned, and only that salary is taxed at self-employment rates. So say you do $60,000 of distributions and a $40,000 salary, only that $40,000 would be taxed at 15.3%. So if we had two businesses both making $100,000, this one being an LLC, this one being an S corporation, if we take that same scenario, then that's going to be over $6,000 of tax savings for that S corporation. So let's talk a little bit more, just kind of hit home more on why you shouldn't set it up too early. So if you make the S corp election, you do have to process payroll, which is an extra cost, and you also have extra accounting fees for making the process happen of making the S corp election. Increased accounting and bookkeeping complexity that you have to handle for the salary and wages and the distributions and the calculation of what is considered reasonable. And lastly, another thing that really hits a lot of business owners if they do it too early is that it will cost a lot more to do the tax preparation, because you have to file an additional tax return called an 1120S for the S corporation that is separate from your regular tax return. So now that we've kind of gotten out of the way what the S corp election is and when to do it, let's discuss how to do it. So if you're in that sweet spot, what you're going to do is first you're going to fill out form 2553 in order to make the S corp election to have your business taxed as an S corp. And the second step that you're going to take is to set up a payroll process. So this should be done quarterly, and you'll have to use a software most likely. You can do it by hand, but I would recommend using a software such as Gusto. That's what I use with my clients. It just makes the whole process easier and automates all the filings and all that for you. And the third thing that you want to make sure that you're doing when making the S corp election, especially in the first few years, is tracking the income and expenses of your books and keeping them clean, but also making sure to track the salary and distributions ratio and keeping tabs on what your separation is as your income increases or decreases throughout the year. So it's not rocket science necessarily, but it does add complexity to your business in order to get these tax savings. So if you need help setting this up, you can click the link down below. I'm happy to hop on a call, see if working together makes sense, and see how I can help you and if this would be the right move for you. But here's where I see people messing up far too often. So the first thing is they pay themselves too low of a salary. They think that they can get by paying themselves a low salary because that means they pay less self-employment tax. But this is actually one of the biggest red flags that you can run into with the IRS, because the IRS wants their money. And so you got to make sure that your compensation is reasonable for you and your position in your industry. So you should look at things like industry averages for your position to make sure you're paying yourself enough and making sure that you're able to comply with the IRS rules of reasonable compensation. And the second thing that I see a lot of people messing up on is not running their payroll quarterly. So this is very important that you make your quarterly filings with your payroll, documenting what you are paying yourself and how that is reasonable. And the last thing, and this is common whether you're a regular LLC or an S-Corp, and this is mixing your personal and business expenses. No matter what entity you're in, this is always a no-no. Never do this. Always have separate bank accounts and make sure that you're keeping all of your expenses separate best that you can. It's really crucial that you don't do any of these three things and that you make sure to stay compliant in every way possible, because I've seen people save $8,000 in taxes, but then get hit on the back end with a bunch of penalties and fines that almost negates the entire savings. So here's the takeaways that I want you to have from this video. If you're under $40,000 of net profit, stay simple, no reason to make the S corporation. Once you're above or at that $40,000 net profit, that's when you should start looking to make the S corp election. Start looking with your accountant, working hand in hand with you to see if it's the right move. And when you do it, set payroll, keep clean books, and avoid all of the rookie mistakes that I mentioned a minute ago. Making this move at the right time can be a major tax play, but you also want to make sure you're doing it properly so that the IRS doesn't come knocking and create a huge headache for you. So if you want help learning about the S-Corp and seeing if it's right for you and your business, you can click the link down below where you can schedule a call with me to see how I can help you and see if working together would be a good fit. If you're not quite there yet, don't stress, don't worry. I've got plenty of other videos that document other expenses and other deductions that you can take as a business owner to help you lower your taxable income before you're even getting to that $40,000 net profit margin. So be sure to subscribe so you don't miss the next one. And as always, never stop your relentless pursuit of continuous improvement. And I look forward to seeing you in the next video.